Good morning, everybody. Welcome to the Flow Show. Bear with me 1 second. I'm just having a look what's going on because we've got some news out of Hong Kong. Oh, look at that. Right up against the top. Yeah, just been a headline dropping that Hong Kong pensions are planning to cut treasuries if the US uses its AAA grade. So that's a bit of news hitting now. Well, look at that move. And we kept an eye on that one. For those that don't know, the Hong Kong Monetary Authority, HKMA, run a price band between 775 and 785. And here we are, bang on the top of it. All right, I'm going to have to keep a close eye on that one. Anyway, that news aside, let's get stuck into the rest of it. I'm all the tither now. That headline coming out. Oh, Mark's saying it's mostly bullshit. Okay. I'll take your word for that, mate. But that move, nonetheless, in Hong Kong dollar is very interesting. Hitting your head against it. We'll have to see if Carl Bass comes out of the woodwork again, wanting to take on the Hong Kong peg after he failed multiple times before. Right. Anyway, let's get on with the rest of it. Going to start with all the China-US stuff. I want to do a lot of swearing about this because we basically spent most of yesterday waiting for it. We got updates when they were started, when they had lunch breaks, when they had toilet breaks, when they had fag breaks, when they had dinner breaks, when they came back from dinner breaks, and all that crap. The whole bloody day of nothing. And then what did we get at the end of it? China was out first. Their Vice Commerce Minister Li saying the talks were constructive and the Geneva framework agreed. This is the stuff that they agreed they were going to do way back. I can't remember when it was, April, May. They agreed all this stuff. They were going to lower some tariffs and look to shake hands on this, that, and the other. All a load of crap. So long story short, they haven't agreed anything except to implement what they'd already agreed to implement and continue communication. Lee said that in-depth, candid exchanges took place and that the communication with the US was rational and constructive. And the framework will be reported to national leadership. And he hopes that progress builds bilateral trust with the US and that teams will be reporting back to their leaders following the talks. Lutnick was out after that saying the Trump call on the 5th of June changed the outcome of talks and expects rare earth and magnet issues to be resolved within the framework. It seems a lot of talking, 2 days of talking just to come to that conclusion. So perhaps there's still something under the surface that we haven't yet heard about that maybe needs to be ratified by the leaders. So there might still be some headline risk to come. But long story short, the market hasn't really given a monkeys about it. It wasn't the big fanfare deal that we might have thought was coming, but it's also not a move backwards or backward step towards hostilities. So the market is happy with that. Yeah, I've just said that, James, on if he's Carl Bass is going to come out again with another failed trade. Anyway, so that's that. They're going to continue talking, which keeps it on the positive side. No risk really for stocks. They can continue to climb higher, US stocks, if they so wish. And now we move on to everyone else. Whether Europe's going to get a deal next, and there's been some headlines out that they might not get stuff done in time or agree anything in time for the deadline, and they might want the deadline kicked and blah, 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 blah. And as Michael Brown pointed out, typical European fashion, can't get anything done on time. And we're probably waiting for the same time as when they're going to release the COVID funds sometime in 2032. Anyway. China hasn't been slow in getting other deals done, though. They're going to work to, or they're willing to implement the zero tariff measure for 53 African countries that have diplomatic relations with China. This is another ongoing thing, China becoming a big big player, already a big player in Africa, and they're just showing how easily deals can be done with zero tariffs. That's a little bit of a nod to the US. A bit of data out of Japan overnight. We got PPI data, which didn't come in as much as expected. 3.2 versus 3.5 expected. 4.1 was prior. Still running some hot numbers though, although negative on the month by 0.2% for May. So one to keep an eye on, but year on year still running a-okay. We've had a lot of knocking back, or a bit of knocking back out of Japan of recent rumours. The Ministry of Finance said that July bond buyback speculation is unrealistic. This was on that headline that they may be looking to buy back some of the long end bonds, the government that is, not the BOJ. But he says that's unrealistic. We've had Kyodo putting out what looks to be a bit of a sources piece. It's not that clear in translation. The headline says, it is learned that the BOJ will maintain its policy interest rate and continue reducing its government bond purchases. So that's a little bit, let's say, potential sources ahead of next week. Pierre Mashiba, yesterday I reported that throwing in some election pledges, he was going to give out some cash to offset the inflation impact. He says that's not true, that they're going to provide cash handouts. So another bit of knockback there. The Holiday Club continues to grow at the ECB. We had Holtzman yesterday, saying nothing needs to be done until the autumn. We've now had Wojcik coming out saying that the ECB is in a very good position on rates, and we can wait until September to discuss the next rate move, he said, as he sat on his suitcase and checked his passports in his pocket. He's off on his jollies as well. ECB's Kazakhs, quite likely that the 2% inflation target will require some further cuts for fine tuning. He's one of the more hawkish at the ECB, and but he's pushing that more cuts could be coming. Lagarde was out this morning as well, just talking a bit on currencies, saying further shifts may be underway in global currencies, and currency shifts may boost the euro's international role. A bit of data out yesterday, not a number I spend too much time looking at, but it is a sentiment number, if I can find it, going a bit blind. There we go. The NFIB Small Business Optimism Index with a nice healthy jump to 98.8. Why is this important? Because as you can see, coming into the year, we were looking very, very positive, and then all this trade stuff and everything has seen sentiment deteriorating, like we've seen in a lot of the consumer sentiment numbers. And now we've got a little bit of a jump, which again just could show that sentiment has changed. Now we're potentially heading towards these deals. We've seen similar in the consumer sentiment surveys, little bits of pickups here and there. Inflation expectations coming down a bit. So if that continues, that's going to overwrite the possible blip that we've seen in this sentiment data, which again means that there's less chance of seeing that filtering through into the hard data, which we're still not seeing yet. So obviously one swallow don't make a summer, but that is a decent bounce in that sentiment index anyway. Reuters has been running a poll on the Fed, and 59 of 105 economists, so just over 50%, see the Fed resume cutting interest rates next quarter, and likely to start doing that in September. 60% or more than 60% of economists said that the Fed will cut rates at least twice this year. Bank of England rate cuts after the jobs data hit. 2 more rate cuts for this year. It was priced just below 46 pips. It was yesterday after the data. Well, we're now fully pricing 2 more cuts this year. Bank of England next week, of course. Bloomberg, obviously, interns were getting bored yesterday, so they thought they'd throw something out to try and stir the market up. So they chucked out a sources piece saying that Treasury Secretary Bessent has emerged as a possible contender to succeed Powell, which got quickly knocked back, obviously, by the White House. US and Mexico are near a deal to lift the 50% steel tariffs up to the volume cap. It's got to go over to Mr. Trump now for signing off. So again, these trade deals slowly but surely coming together. India, that's looks to be just one step away from getting the rubber stamp as well, and signed, sealed and delivered. Iran, yesterday Trump was saying that they're becoming much more aggressive in nuclear talks, and unsurprisingly, the mood was a bit sour yesterday and looked like it was heading for trouble. But the Iranian foreign minister has been out to saying that the Iran nuclear deal can be reached rapidly, and that not having weapons is part of their doctrine. So we could be nearing a resolution for that. That's it. Oh, not much else going on, really. As I say, we were all sitting here picking our nose for most of yesterday, waiting on this China stuff. So not much coming out on the headline front there. So we can have a look at what's coming out today, which is going to be CPI data. And you'll see that CPI is expected to tick up 2.5% from 2.3% previously. Other calendars have that expectation at 2.4%. So the range across Reuters and Bloomberg is 2.4, 2.5 for the headline number. The core number, both expect that to go up a pip to 2.9%. This is May data. It would not be a surprise to see inflation rising, given all the tariff stuff and the trade stuff and all the front running stuff going on. So don't be surprised if that goes up. It doesn't necessarily mean much for the Fed. A lot of Fed members, or a few Fed members, happy to look through the potential inflationary impact from this trade stuff. The question will be, if deals start getting done, will that ease things enough to see inflation coming back down? So this is probably something that's not going to play out over the next 1 or 2 months. We're probably going to be seeing this reaction coming 2, 3, 4 months down the road, just because inflation doesn't move that quickly. It's a very lagging indicator in terms of what goes on at the ground. But anyway, that's what we're expecting. The surprise will be if we get softer numbers. So if we get numbers round about last month or even less than last month, that will probably be the more surprise trade, because that will then ramp up Fed cut expectations. But Fed next week, again, they might look through that data anyway. So if you're on the screws, I don't think we see much reaction in the dollar. But now we've got this China stuff out the way and the mood is still on the positive side of things. We're not looking negative anymore. We could see the dollar recovering a bit more against some of these currencies that it's been hit against, but it's not looking like the euro wants to go anywhere fast, no matter what the headlines are. Keep an eye on the earnings numbers as well, because that's always important, just to see if there's any big changes there. But apart from that, it's a fairly quiet day, and I don't know where we're going to get the inspiration from now. We haven't got this China meeting, so it might be a good time to go out and do some gardening. Right, let's go look what's going on in prices anyway. Let's keep an eye on that Hong Kong dollar. Right, let's start off in dollar yen, because that was having a little mooch up above 145. UEDA sort of cracked the egg yesterday, which has made it easier for it to go through today. We're not exactly going gangbusters, quite quiet this pair at the moment. We know how volatile it can be. So we had to move up. We couldn't just get through that high that we had previously. So that's a bit of a marker. And now, as I speak, we've been down testing the, let's come in a little bit closer. Just coming in and testing the bottom of the zone, 144.90. So now we're playing what happens in the zone game. Are we going to hold it and move higher, or are we going to break back under and then it become resistance again? Based on the price action that we've had this uptrend going on pretty much for the last week or so, I think, and now we've had this break. If we do hold here, then I think we're probably going to be heading a bit higher. Where we can go from there is anyone's guess. There is some small resistance around this 30s area, then a bit more around 50s, 45, 50s, all small stuff. 146 is going to be the main level above where we had this price action previously, and the highs into that 146.30 area. So that'll be a level to watch should we get a bit more of a rally in here. Keep an eye on yields because we're not straying too far from this 450 level, and we keep coming back to it. So if that goes, then as I mentioned, beginning of the week, seems that dollar yen is following yields a bit closer than it has been of late. So if we're going above that 450 again, expect dollar yen to follow suit. What else? Oh, you're finally having a look at dollar yen brand. Very good. Watch that volatility, mate. The pound is still struggling today. We've got Rachel Reeves speaking in about an hour and 15 minutes on what's called the spending review. Now, this isn't budgetary in terms of deciding where they're going to pull money off the magic money tree. This is basically where she's going to allocate everything she said she's found, or the spending that she's drummed up from the spring budget, the spring statement. So this is the point where she says health service gets that amount, or we're cutting you this amount, and jiggling the counters, should we say. So for the pound, it should be neutral, as I say, because there's no change in how much money she's got to spend and allocate. It's just where she's going to put that money, who she's going to cut to get that money elsewhere or whatever. There is talk of a big housing spending plan, which was part of the election promise or the manifesto to build homes. So that's probably going to be the good news that she tries to cover up all the bad news with. The only thing really to note for this is how much discontent her plans might sow in the various government departments. For example, if she's going to cut funding from one area to give to another area, the area that gets cut is going to kick up a stink. And, if it's something like the NHS or teachers or whatever, then we're probably going to start to hearing about strike action and that sort of thing going on. To be fair to her, and I'm not fair to her very often, it's probably the first time, she's got to make these choices, and she's going to piss off someone. She ain't going to make everyone happy all at once. So there's going to be plenty of people pissed off, and probably those that are getting money are going to be pissed off that they're not getting as much as they need anyway. So it's pissed off all round. But anyway, if you're thinking what's coming from the spending review, it shouldn't be too market moving. So don't get all hopeful about that one. But anyway, back to the quid. Euro sterling, we had this move. Finally, the break above this 84.50s area held as support. Now we've moved up above the next area, this 60 level. Haven't really had a real test back of it to see if it's going to hold, but, it's moving 10 pips every 5 hours, so shouldn't get too expectant. But it is looking more bullish than it was anyway. It's broken the downtrend at least, because we stopped going down now. So now we're heading up. There's only one other way you can go, really. This 84.80, 85.20 zone is a big one, as I've shown time and time again. Bit messy in there, but you can see it goes back years and 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 years. So we have been messing around there before. We had all this spike stuff back in April. We're coming up again a bit more calmly. So I expect, I'm not saying it's going to hold definitely, but I expect to see plenty of price action happening in that zone. And let's go back onto the hourly. So if it moves up through that zone and starts holding the top, then we probably are heading much higher, maybe going for a run up to maybe the 86s, up into these levels and another zone up there. But if we fail into here, then we're probably just going to sit in this bit of a consolidation range, probably 84s, for now. So I'm still short this one. I might have a little tap in this zone just to add a final piece, because I do feel like being a bit short the euro, just purely on the ECB. But I think there's every chance that, given we've got the BOE next week, we could see the pound staying on the back foot and staying a little bit weaker than it has shown of late, just till we get over that hump. Where we are after the BOE, I think that will be probably decide the next direction. If we're above this zone, then we're probably going to be heading higher. If we're not, if we're holding below here, we get through all that, then at the least we're probably just going to sit in this consolidation range. But there may also be a chance that this downtrend continues since April. So trends within trends within trends. Cable, just want to show you my long-term chart. I did chuck it in the room this morning, but just want to show you that quickly. We've got this big level up here. You can't really, you have to put a line in somewhere, but it's 136.70, but it's really anywhere sort of 136.50 up to 137. You can take it, but you know, as I say, you've got to put a line somewhere, and you can see it has a lot of history along this level up here. Back into 2017 and way beyond as well. So it is one of these big levels you just need to keep an eye on. If only just maybe as a first tap basis, it might be one that's worth just looking at to see if we give it a knock and then get a decent reaction back from it. In the meantime, we're looking the other way. We're messing around. Let's go into me back into my short-term chart. There we go. So we're messing around this 135 handle again. We couldn't really get back above and stay there yesterday, back below, not quite getting down to this 134, 45, 50 area either. So a little bit of sideways action going on. Again, probably take your cues whichever way we go. If we're back above 35.20s, then we might push on to the 136s and have a go at these highs. If we're below there, this line here, then we're going to probably tap on the 134 not long after, and then see what we do after that. But otherwise, your levels, really, it's a game of playing the halves and the double O's, 50s and the double O's, down to 133, probably all the way down to this area here that was a former break point down there. Aussie dollar, that's still keeping everyone waiting. We keep banging our head up on this zone. But as you can see, the dips are becoming more shallow, more shallow, more shallow. So it's potentially setting up for a break. And I haven't yet, but probably after the show, I'm probably going to maybe stick a couple of buy stops in through the fib, through 50. Because if we do break through here, experience tells me, and watching this sort of stuff, that when you get a level that holds for a pretty long time, when you get a move, it should be a bit of a volatile one. So if we do break here, I would be expecting a quick rush up towards the high 65, at least maybe to 66s, 65.90, something like that. If it grinds, though, that will change the complexion of it. So if I have a buy stop, I don't know, 55, and it takes half hour to trigger that, and then half hour to trade to 60, I'm going to be very careful about how long I'll sit in that trade. I'll be quick taking profits. What I'd like to see is 55 triggered and a quick run up to 75.80, lop a bit off, take a bit of profit, stick it in the bin, lock in the rest, and then see what it wants to do from there. But yeah, this one, it's ready. It's building up for a blow. Doesn't mean it's going to blow. We could still hit our head on here, and then buyers give up because they can't get through, and then all the short termers who've been buying all these little dips think, right, we're not going through, so they're going to get out of dodge. That's when you get a steeper pullback, and then we'll see where that pullback goes to. So no guarantees, but you know, as I say, too many knocks on the door. At some point that door is going to open, and then we'll see whether we're going to walk through or tumble through. Dollar CAD, still not out the woods. Still can't get above 137 and hold it for any length of time. as I pointed out yesterday, we banged our head up here on this little support term resistance area, 137.30s. We're now back down. Haven't got a proper test in on that 136.50 yet. So 60s is where we look to have been stepping up support off of this level now. So this one is still a bit of a coin toss as to which way it goes. You know, got a lot to do to break this downtrend. Even if you take this phase from May, it's not rallying very much. So on balance, it looks like we could be heading much lower, but we're not going to go low unless we get through that 136.50 again and then knock out that prior low. We can always break that level 50 and then pull up again there, and then that might confirm a low, and then we see a bigger reaction. But you know your levels, 136.50 is your first line, then this prior low, 136.35 is your line in the sand. But then also be careful, because we've got this zone below, not too far away, which again, another decent traffic area into 136, 135, 80-ish. Okay, so that will be another zone to look for. So even if we break 35s, we haven't got far to go until the next one. So it could be a bit of a grind move lower rather than a big, massive break. Headlines permitting, of course. Surab, when I was looking at Aussie dollar, he said same applied to Kiwi. Yeah, Kiwi's got a bit of an area coming up here. We've not, well, it's coming a little bit. So we've had similar. So we had this level here, 60-30s, where we banged ahead, banged ahead, banged ahead, banged ahead. And this has been a bit of a grind through. And we've got a similar situation going on here now, 60-60s. Okay, we're not quite getting through. It's part of a bigger zone, as I just showed on the longer chart. Going back to, you know, what we had on the way down. There was a bit of support, bounce, break, resistance, and then we had the big break. Okay, so we're struggling at this zone again. So this is a bit exactly the same as what's going on in the Aussie dollar, exactly. So you need to get this move above it. Okay, this one though, because it's fairly short term, you know, we're talking just the price action this week, whereas Aussie dollar at that 65-30s has happened over a bit of a longer period. A break, you know, might only give you, it won't be as volatile. You wouldn't expect it to go from here 60-60 up to 62 on a break. You know, you might get to the top of the zone, you might get a test at 61, okay, before it runs into the next line of trouble. As we can see, we had again another test of the magnet in Aussie Kiwi. A little poke there, still not getting through. So maybe, what was this, 1, 2, 3 times of having a crack at that since the breakdown. You know, again, dips are still fairly shallow. If we get another move through there, it might be the one that goes on. But we love this level, or this pair loves this 108 level, always coming back here. Quite an amazing number, really. You do get them, as you can see, particularly since, you know, 2013, always coming around this line, always coming back to it. So it's worth trying to play this on the range edge. I was playing this on the up to the 111s previously, and now we're doing it again here, and we're not going straight too far. So if you've got patience, you just sit and wait for some of these edges to show up. Let's just come in a bit. You know, pick some of your wider levels, like up here, 111s, 112s, where you get these decent rejections. You can give it a go for a range trade and see where it wants to go after. I didn't manage to ride this one down all the way down here. Unfortunately, I got stopped out right there on my trailer, being a bit too tight to that line there after being short up here. Not complaining, made some money, but yeah, missed out on all that lot. So anyway, that's that one. Aussie yen. Aussie yen. What are you up to, Derej? Let me know. Still got this line up here, 95-70s. Similar story to everything else. Aussie dollar, we've got this resistance area. Quite a solid one. You know, tried it in March, tried it in May, pretty solid. So again, if you're looking for a trade, a move back above here, probably be a decent break trade, probably get you up to 97, 97 and a half, or this area of traffic up here. But another failure there should see a decent pullback if it's a real solid failure. If it's just a hit first time touch, pull back 100 pips, keeps this momentum going here, then again, you're probably going to be looking for a break up. You're trying a long. Okay, mate, good luck with that one. You long at market or below, or where are you long? Hopefully you're long from down here, this nice little level, 91.80s, 91.90s. If you're long from there, you've got a decent run, mate. But I personally, I wouldn't be buying it here in the middle. I mean, I probably need to do a bit more tech work on it, but this looks to be a bit of a middle of this sort of range here. So either try a short or reverse it long, or wait for a decent dip to get in. I'm going to have a look at the metals. Gold look like it's trying to hold this 30-30s. You got the move up above yesterday evening. We haven't yet retested it, but looks like we're going to be putting in a test right now. This is potentially going to be important, because if we hold this 30 level, maybe here 33, 32, 31, if we hold that, then it's going to give it the impetus to go and take out this, again, just this week, intraday highs, 33.50s. Okay, so that will be the kicker. You're not going to get anywhere else unless we're getting through 33.50, but it needs to hold here. Or what else can happen is that this can just be a little bit messy. We have got this uptrend going on, but you might get a little something like that maybe going on. But if you get a hold above this low on a dip under 30, so if we get a hold around about there, let's call it 33.23, there you go, stick a pin in it. If you get a hold there, then you're going to see a move back up. And again, it's either going to fail here up before there, or it's then going to go and take on that high and move on up. So for now, yeah, you just need to wait and see what it wants to do at this 33.30 level. Silver, for those that are trading it, oh, where's all my lines gone? Oh, I don't know, all my lines have disappeared. Oh, never mind, I'll have to put them all on again. I don't know where they've all gone. Right, let's get them out again. So we've got a bit of a breakdown. I was looking at this morning. Let's get rid of that. Where was I looking at? No, round about there it was, about 35-ish. I think I had my line in. So I had my line in there. I said yesterday, watch out for another retest up towards these highs. If we hold here, if we hold there, then you're going to get, that's going to give you a bit of evidence that we've got at least a short-term top in play. Okay, what was the time? 11:15. So around about there, I was saying that we got to here, just about match that secondary high from Monday or after Monday. We've had the dip back. It's got down to this area. Again, all short-term levels. So, you know, you're going to get these little moves through. It's not going to be exact. Then we got the bounce, didn't bounce too far. And I put out on the analysis in our room today, watch out if you get a move back to the highs, or if you get a new high, it's going to keep going. And you know what happens if this level breaks, you're going to see a dip further down. And that's what we're getting at the moment. So now we need to just pick where we're going to find the next level of support. I have no idea where all my lines have disappeared. So I'm going to put it across there. So again, we've had a little few cents under, but we've got back above. So this is possibly 36s, 36.05 is where we might find a bit more support coming in. So you need more evidence now. So if we dip back there again and hold it, then you know the range is going to be from here up down to here. So it's all just about building a picture. We've already starting to get resistance into this break point, okay, at 35. So technically, it's giving you the clues. You know, when we were doing this, where's the top, where's the top, where's the top? All right, now we've got something to work with. Right, where's support, where's support, where's support? All right, that's broken. Look for the next area. Broken support is now resistance. Okay, so you're not going to get new highs unless you're going to get back above there. So that's a bit of a key level now for that support. Well, we've shown the first hand a bit of support down here, 36s, 36.05. That's your marker for the downside today. So take your cues from that. But you don't need to be going, oh, yeah, I'm going to short this and it's going back to 28 or anything like that, okay? Because you've got no evidence to suggest that whatsoever. But it doesn't mean you can't get into a trade and then see where it wants to go whilst being careful if it doesn't go there. Right, stocks quickly. And let's look at the S&Ps. So this was a bit of a rough line, but it's my line anyway. 60.12. We were banging our head around there for a while. It's gone a little bit messy. We have moved above it. We have had one little half-hearted attempt at support. We are finding support just ahead of that now. So this could be sort of the building action you want to see. A bit like what we got here at the 59. Messed around it, messed around it, messed around it. Then we got to move up. We've had an attempt at support. This was over a longer period, but as you can see, the price action is pretty similar. That move higher, down below, that move higher, down below, and then we start grinding back up and then finding support. So a similar move here, just over a shorter period of time. I don't see any reason why stocks would go down. In fact, I'm going to watch the CPI data, and if the data comes in super hot, likely we see stocks taking a little dip, and that might be something I decide to have a little tap on and go long on that dip. If CPI is much softer, then rate cut expectations are going to ramp up and stocks will probably be going higher anyway. So that's what I'm looking at for that. FTSE, that's still trucking on, still looking fairly bullish, though now we've just run into a bit of trouble. Again, this one might be waiting to hear the super nuts from Rachel Reeves before deciding whether the UK is going to implode once again, because everyone likes getting a bit bearish. Same thing for the wider 250 or the all share index. Not making any new highs yet, but not pulling back too far either. Right, anything else for anything else? Well, I'm going to call that a day. Yeah, tomorrow I'm going to have Mr. Brown on so I can give him some grief. And I'm not sure if K-Man's back or not, but if he is, then that'll be an added bonus. We have 3 of us on the show tomorrow. Right, have a great day, everybody. Take care. Watch that CPI data. Follow us on Face. We'll be covering that live. And I'll see you all tomorrow. Have a good one.